Hi, I am Max, and today I shall be dissecting the stock movement, risk and reward of the stock NVIDIA. Now, let me show its price chart up to the closing hour on October 28, 2024. All right, let's dive into the latest on NVIDIA's stock performance. So, as of today, NVIDIA is sitting at a price of 141.54, which puts it right up against a key resistance level at around 144.42. Now, for those of you who might be newer to the game, resistance is like this invisible ceiling, a price point where the stock has historically struggled to push through. If it can break through that 144.42 mark, we could see a lot of bullish action kicking in, maybe even a nice rally as new investors jump in. But let's zoom out for a second and look at the big picture here. NVIDIA's current price is in the 99th percentile over the last 200 trading days, meaning it's about as high as it's been all year, nearly the top of the range. And if we just focus on the last 50 days, it's still in the 96th percentile, which tells us it's been on a really solid uptrend even in the short term. So, whether you're looking at the last 2 months or almost a year, this stock has been crushing it. Now, of course, with every climb, there's always a bit of risk of a pullback. That's where our support level comes in, down around 114.03, which is quite substantial from the current price. Think of this as the floor. If the price were to drop, there's a decent chance it might find some stability there before any deeper declines. It's like our safety net. So, what does all this mean for NVIDIA right now? Well, we're in this interesting place where the stock is near its peak, and it's right up against that resistance level. If it punches through, we could see an exciting breakout, like a rocket ready to launch. But if it gets rejected here, we might see a bit of a breather or consolidation, which could be a great setup for long-term investors looking to buy in on a dip. In short, this is a stock with tons of positive sentiment. It's near its highs, showing strength in both short and long-term views. But the next couple of days will be key. All eyes are on whether NVIDIA can break above that 144 level, or if it'll take a pause and maybe retest some lower levels. Either way, it's definitely one to keep on your radar. All right, folks, let's dive into what's going on with this stock's options activity as it heads towards the end of November. We're seeing some interesting signals here that are giving us clues about how traders are positioning and what they're expecting next. First up, let's talk implied volatility, or IV. That's basically how much the market expects this stock to move. We're seeing that IV is higher for put options, especially at those lower strike prices. So, what's that mean? Well, when IV on puts is elevated, it usually signals that folks are a little jittery about the downside. They're paying a premium for protection against a drop, almost like getting extra insurance in case things go south. In other words, we've got a cautious, maybe even slightly bearish vibe here. Now, on the call side, that's the bets for the stock going up. We're not seeing the same level of panic or urgency. Call IV is a bit lower, meaning the market isn't expecting as wild of an upside move. But here's where it gets interesting. There's a big chunk of call volume hanging around the 150 strike price. So while people might be cautious, there's definitely a group eyeing that 150 level as a potential target or ceiling. They're hedging for the possibility of the stock inching up there, even if they're not betting on an explosive breakout. Looking at the volume itself, the put action is scattered around strikes, like 120 and 130, which are lower than the current price. So we've got traders locking in some downside protection, almost like they're setting up for just-in-case scenarios if the stock decides to drop. Meanwhile, on the call side, that 150 level is like a magnet. It's where everyone's clustered, suggesting that's the line in the sand for potential upside. So, what's the takeaway? It feels like the market is straddling two ideas here: caution on the downside and some hopeful optimism up to that 150 mark. It's like they're saying, yeah, this stock could go up, but we're keeping our guard up for a dip just in case. If you're thinking about playing these options, a strategy that taps into that volatility skew could make sense. Something like a put spread might let you leverage that higher IV on the downside. Or maybe an iron condor if you think it's going to stick within this range. In short, this setup is cautious, but not overly bearish. It's a market saying, we're watching for downside, but we're not ruling out a push to 150. Keep an eye on that resistance level, because if the stock heads there, it'll be interesting to see if the market backs off or gets more aggressive. All right, let's talk about what's going on with implied volatility on this stock. There's definitely a story here, and it's one worth paying attention to, especially if you're gearing up for some action in the options market. So, looking at this chart, we've got IV for 30-day calls and puts over time. That's basically a gauge of how much movement the market is expecting in the short term. And alongside that, we've got these 50-day and 200-day moving averages to help us see the bigger picture. First thing that stands out? That recent jump in both call and put implied volatility toward the end of the chart. Both lines shoot up together, which tells us the market is expecting something to happen soon, maybe a big earnings report, maybe some market news, or maybe just a shift in sentiment as we get into the final stretch of the year. Traders are clearly anticipating movement, and they're paying up to position themselves for it. Now, let's talk trends. The 50-day moving average has been drifting down for a while, which means the overall expectation for volatility had been pretty mellow. But then, boom! This recent spike shakes things up, hinting at a potential transition toward more action. Meanwhile, the 200-day moving average is creeping up, which is like a slow burn signal that volatility expectations could be heading higher in the long run too. So, what's the takeaway here? Basically, this chart says, get ready. The market might be in for some excitement. With IV jumping, options are going to be pricier, but that also means there's a bigger expected payoff if the stock moves. It's kind of like the market saying, hey, something's coming, and we're not sure which way it'll go, but it's going to be big. In conclusion, the sentiment of the market appears to be more on the bearish side. Thank you for watching, and if you think this presentation is informative, please subscribe and upvote.